Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to this week's episode of the Business Talk with Ajay right here on ITV Gold. The show brings you all the things that you need to know about a certain business. Every week we pick on industry, we pick on industry where South Asians are in it, they own it, and they have excelled in it, and they are into the business, and more South Asians are going into those industries. So we decided to bring you in and out of that industry. How does that work? How does it operate? What's the management situation? And what are the ways to make it successful? And how can it fail if it's not planned properly? So all the things brings you in this show called Business Talk with Ajay. The show is brought to you by Science CPA Services, a full-fledged, complete professional accounting firm located in state of New Jersey, multiple locations in New Jersey, and their on-hand trained, experienced CPAs will guide you and will assist you in any tax matter, whether it's a personal or corporate tax matter. If you're a business owner, small, medium to large size business owner, Science CPA Services staff can help you out. And if you are in the middle of IRS tax audit, Science CPA Services can also assist you in that, and they've been helping hundreds of thousands of individuals throughout the state. They can be reached at 908-380-6876 or visit their website sciencecpaservices.com. With that note, I'd like to welcome Mr. Ajay Kumar of Science CPA Services to the show. Once again, Ajay, welcome to the show. Good to have you.
Thank you. Thank you for the kind introduction.
You're very welcome, and thank you that every week you join us and you give us, in depth of industry, different industries in the show. This week we're going to talk about also very meaningful that you may find it useful, to you, because this is something is a really important part of life. You have accumulated wealth, you're wealthy, that's good to know, but then many times you can't plan your wealth because you need a professional, and that's why we go out and look for a wealth planner or certified financial planner who can plan your wealth, who can guide you, advise you where to invest your money in order to save taxes, what's a safe investment, and what are the gray areas, what are the black and white areas. All that things is a wealth planner, and AJ is going to take us into the deep with the wealth planner. How does that wealth planner work?
Yeah, absolutely, Sanjeev ji. So I want to clarify for our viewers, wealth planning, this episode where we are going to be digging deep into what wealth planners do, what the industry is all about, how should you go about it, is not just for wealthy people. If you want to be wealthy, and I bet you do, then you need to see this episode. You need to learn how do you go about it, how does the journey start. So typically we are asked,
good point, yes,
what does a wealth planner do?
Yeah.
How do you go about it? I'm not a wealthy person yet. I want to be wealthy. What should I be doing? Well, start with a financial planner. So wealth planning is a general term. It's used for multiple reasons in multi aspects of life. So there are several different type of wealth planners. So you can start with a financial planner, you can have a tax planner, you can have an investment planner, you can have an insurance person. So everybody has
an estate and trust,
absolutely,
which is a big thing nowadays.
Absolutely, depending on which part of stage you are, maybe a trust planner. So you have to take a step back and see in your situation, what type of planning do you need? A financial planner, for example, typically does budgeting, forecasting. He will look at all the numbers that you have. He'll set goals for you. Let's say if your income is $100,000, then you better spend less than $100,000 so you can slowly create a nest egg for your retirement, for your children's education, for their marriage, for the business that you always wanted to buy or start. But that planning has to start today. How much money you make, how much are your expenses, how much you can afford to save every week, every day, every month, whatever your parameter is. And that job is typically done by a financial planner, where they look at the budget, forecast, set some right goals for you, practical goals for you, and then you work around those goals to get to the end result that you want. Similarly, if you are going with a insurance planner, you want to see, well, I have home, auto, we call it P&C, property and casualty. Similarly, you have health and life insurance. Health insurance is mandatory, very, very important. Then you want life insurance. Then you want to see, do you want a term life insurance or a whole life universal or some sort of pay 10 life, meaning you pay for 10 years and it's there forever for you. Depending on your situation, you can have that conversation with a life insurance expert. You can also have a similar conversation with a wealth planner. These are the people who have ideas about where you should be investing money, investment advisors. So these people will help you balance your portfolio. Some money should go to bonds, some money should go to ETFs, some money should go to stocks, some money should be invested into cash, FDs and CDs for emergency fund. You want to balance your portfolio. It also depends on how old you are. Older you are, more safer you want to be. You don't want to be more aggressive. Younger you are, you can afford to be a little bit more aggressive, and aggressive typically means more equity as opposed to bond. More bonds are typically seen as comparatively safer investment, lesser return but safer. You will also learn from these investment advisors. More aggressive you go, higher the return you can expect. But again, have that conversation with them so they can help you plan a balanced portfolio, what makes sense in your situation, with your age, with your financial situation. As Sanjeev rightly mentioned, you can have a trust situation.
Yes.
Depending on how much net worth you have, how many children you have, you may have a situation where some sort of irrevocable trust is needed.
Yes.
But you want to have a conversation with an estate planner, trust attorneys. These guys will not only help you understand what it means to have a trust, they will also help you understand the obligations, the benefits that you have by having the trust. So you can avoid the estate tax. The estate tax is absurd. In the state of New Jersey, if you don't have a will, if you don't have a trust, the state has a lien on all your assets up to 50% just to avoid the exit taxes. So you have to have this planning done. It's not about if you are a wealthy person. It's not about if you are a millionaire. It's all about planning. You want to be a millionaire. You want to be a wealthy person. If you already are a wealthy person, thank goodness, you want to protect the wealth. You want to grow the wealth for the next generation. And that's why you need all this planning done right now.
Very good. Thank you so very much. Now, all the categories that you mentioned in the planning, wealth planner to financial planner to investment advisor and tax advisor and whatnot, how and where do you find an expert in the planning of all these things?
Well, absolutely. So, thank goodness, all these fields have their own certification, licenses, experienced. So, when it comes to finding the right person, first you have to know, what are you trying to find? Are you looking for a good tax advisor? Well, you want somebody who is a CPA. You have somebody who has been doing it for some time. So, the education, the experience, the referral, all these things come together for a wealth planner. To be a good wealth planner, you are looking for somebody who has Series 7 and Series 66 type of licenses. Then you want to see how many years they have been working, what type of clients they have, what referrals they have. So you want to go through your due diligence. Similarly, for a financial analyst, financial planner, you are looking for somebody who is a CFP, certified financial planner. Say, for example, we do taxes. I have MBA in finance from New York University, so it gives me the financial angle to it. We have a CPA, I have a CPA degree, and I have wealth planning degree, Series 7 and Series 66 license. I have PNC and life and health insurance licenses as well. So the idea is, gives us the wholesome look at the client situation. We can look at it from the tax angle. Being a CPA, we can look at it from the wealth planning angle. We can look at the need for the insurance, need for the estate planning. So you're looking for somebody who has the right education, right experiences, right licenses. They have been doing it for some time. They have an office. They're not doing it from their basement, and they have some referrals, some clients to mention.
Okay, very interesting. Now, this can be a little bit more, risky also, let's put it that way.
Yeah,
because
absolutely. It can
some
be.
financial planners and wealth planners, if you have not done your due diligence, then your life savings or whatever the amount that you're putting in there for the planning, it can turn out to be a very risky move. My first question to you is that should somebody go out and get somebody who is referred by somebody that they know, or you can randomly pick a person?
Well, I think referral helps, but at the same time, it's your money. You have taken your life to make this money. It did not come easy. So don't go with just a referral or it's my friend or it's my family. It's a decision. It's a business decision for you. As you rightly mentioned, Sanjeev ji, you don't want to be losing this money. You cannot afford to lose this money. So you want somebody professional. You want somebody who has the right licenses, right education, right experience, right referrals, has an office, has been doing it for some time. You do not want to go with friends and family. That does not make sense in this case.
Correct. You know, having certificates, having licenses is one thing, but experience is also needed, right?
100%, absolutely.
You know, one should have really good experience in their portfolio, that how many clients they have served and what kind of return that they have, you know, and given to them. And also that, you know, to see that who can daily monitor your investment and can update you and everything. Because, you know, AJ, let's look at the darker side. There have been many stories about this, you know, financial planners really mishandling their clients' accounts in millions of dollars, right? And we have seen that
they are not true financial planners. They don't have the right education. They don't really have the right.
Maybe they may have right education, but their intention could be wrong.
Well, I hope not. That's illegal. That's a crime. If the intentions are questioned, that's really a big thing.
Because when they see so much money coming into it from their clients, right? They're maybe, you know, they may be having a different thought and, you know, misusing it money, mishandling the money.
Absolutely.
That's a word that I'm using it.
No, you are 100% right, Sanjeev ji. But that being said, that's why it's important for you to do the due diligence to make sure you find somebody who has been around, who has been in the market for some time, who did not start it out of greed, who did not start last year, 2 years ago.
So that is the first very important point, you know, as we are going into the break, before the break, that due diligence is very, very important. And for that, if you ever need an advice from a very professional CPA firm like Science CPA Services, Ajay Kumar and his staff, they can really definitely help you out. With that note, we're going to take a short break. When we come back, we'll continue our conversation on this industry wealth planning for you. Stay with us. Welcome back to the second half of the Business Talk with AJ. This is the show, as I mentioned earlier at the beginning of the show. Now, this is show brings you in-depth knowledge and information about certain industry. Every week, we pick on industry and AJ gives us complete insight of that industry. In case if you have just joined us for the very first time, this is a weekly show right here on ITV Gold. And this is a show basically to educate you and to inform you about the industries. And if you are a business owner in one of the industries, that will also help you, and it can help anyone else also, just to get the general knowledge. Once again, the show is brought to you by Science CPA Services. Now, as you know, Science CPA Services is a full-fledged tax accounting firm. They can help you with taxes and everything. That all you know that. But additionally, they can also advise you and guide you on your taxes matter. That means now, the remaining 6 months of the year, this is the time you should look into it, that where you can invest money. Let's say if you have extra money, bonus, whatever coming in your way, then you want to invest it somewhere so that way you can minimize your tax liability. And Science CPA Services is one firm that advises their clients very regularly, very effectively. Not too many CPA firms would do that, but Science CPA Services is one of the firms. So please do give them a call and get an update. Just a one review would definitely help you. You can reach at 908-380-6876 or sciencecpaservices.com. AJ, as we are talking about, you know, wealth planner, financial planner, tax advisor, and estate and tax attorney and whatnot. Now let's continue this conversation. All the categories are done. What are the different programs where they can invest the money?
Absolutely. So as you rightly said, half the year is already gone. So whatever money you have made, you need to invest it properly. You wouldn't believe, Sanjeev ji, how many people come to us at the end of the year during the tax time. I don't want to pay taxes. How do I minimize my taxes? And I politely tell them, this discussion should have happened last year. Because when we are doing the taxes in March and April for the prior year, it's already too late to be making those changes. It's already late to be investing into a lot of those plans. So now 6 months is over. You know whatever money you have in your business, in your bonus, in your whatever savings you have. This is the time you need to look at where should I be investing this money, not only to grow this money, but to be tax efficient about it.
Yep.
So you can minimize the tax liability over here. So in this section, let's discuss at a high level, of course, in the limited time, several plans that we have that are called as tax qualified plan, tax efficient plan. And let's start with 401k. If you have a job, if you have a business, if your business or the employer offers 401k, you can invest up to $22,500 and not pay any taxes. If you are over 50, the limit is 30,000. You can push part of your salary, part of your compensation into that plan, 401k plan, but this has to happen before December 31st. You cannot go to the CPA in March, April, how much money can I put into 401k? That doesn't work. So 401k is very, very popular, very, very common plan. Try to maximize the contribution in 401k. A lot of time the employers match. So in order for the plan to be qualified, a lot of employers match up to 4% of the contribution. So if you contribute 4%, employer contributes 4%. So right next day you have 100% growth in your plan. And best part, you don't have to pay taxes on this contribution. So the next thing we can cover is SEP. Let's say if it's not a job, you have a small business, a small LLC or S corporation, and we call it Simplified Employee Pension Plan, SEP, P as in Peter. This is the plan that you will see most talked about plan for small businesses, most popular plan for small businesses, because this plan does not need an actuary. This plan has zero expense. So a lot of small businesses will choose SEP, and SEP allows you to contribute up to $69,000. If you remember, the 401k plan was $22,500.
Yeah.
SEP allows you to contribute up to 60. I mean, there are formulas around it. There are rules around it. It depends. The maximum you can contribute is 25% of your LLC profit, or 20% if it's an S corporation of your compensation, up to $69,000. The key is $69,000 is still a lot of money. The best part is tax deferred. You don't pay any taxes on this money right now, and this money grows tax free for you. So tax efficient planning. The other thing you can do is consider a defined contribution plan, defined benefit plan. These plans are expensive to manage. You can't really choose it yourself. Your employer has to start the plan. Your employer has to offer. Not many employers offer the pension plan, which we used to call defined benefit plan. Not many employers have it. A lot of employers are not able to afford it. But if your employer does offer something like this, a simple IRA, a defined benefit plan, defined contribution plan, 403B plan, you must look into
profit sharing plans.
Profit sharing plan, you must look
Exactly,
into it. Profit sharing plans are very uncommon. Profit sharing plans means I make $1 and I'll distribute X amount to all my employees based on their salary, based on their age, because based on their year
But
of
isn't
duration.
it more popular in Fortune 500 companies,
Not
or
profit
maybe
sharing
maybe
plan.
the big executive employees of certain top firms,
The
they get
problem
profit
is
sharing.
you cannot offer profit sharing plan to certain group. You cannot give profit sharing plan to executives only.
Okay.
Profit sharing plan, if applied, has to be given out to everybody in the company, every employee.
Yeah.
You can have a rule, I will give this plan only after 1 year.
Okay, so if certain companies which are employee owned,
That's
there are companies where, and there are big companies that are employee owned.
They call it mutual company.
Okay.
Those companies have the profit sharing plan.
Okay.
Or you will see a lot of profit sharing plan in large attorney partnership where they have 10 attorneys working together. You take care of trust, I take care of real estate, this guy take care of litigation. They typically have this profit sharing plan because they are using the common expense structure. One receptionist, one office, 4 attorneys, 6 attorneys, 10 attorneys are sharing that office location. In those cases, you will see profit sharing plan. But the idea is, if you have any such plan offered by your employer, or that you can apply in your situation, work with your tax accountant, work with your wealth planner, make sure you identify that plan and then maximize the contribution. Make it tax deferred. If it's not tax free, at least tax deferred. So you don't have to pay taxes on this income now until you retire.
Okay. All right, then there is the other plans also, such as cash balance or something.
Yes, absolutely. So defined benefit plan is also referred as cash balance plan,
Right.
or in layman terms, a pension plan. This is also defined benefit plan. Defined contribution plans are more common now than defined benefit plan or cash balance plan or pension plan, just because they got just too expensive.
So now my question to you, all these plans that you mentioned, obviously 401k is the most popular one.
Absolutely, it
Right?
is.
401k is the most, then you mentioned SAP and then simple IRA and many other plans. So in these plans where you can invest money, whatever the limits are, from 22,000 to 69,000, whatever that is,
Right.
all the plans have the same rule that you can take out the money and pay taxes at your retirement age, which is 65, 65 and a half, whatever that.
Well, there are other plans as well.
Huh.
The plans that we are discussing here, just because in the wealth planning industry we are talking about being more tax efficient, so we are only covering the plans that are more tax efficient, where
Okay.
you can defer the taxes. Other than these plans, you have several other plans that you can contribute. We are not talking about IRA, Roth IRA. In some cases you can contribute, but it's not giving you the tax advantage now.
Okay.
We call them Roth plans, but in this discussion I was trying to cover only the plans that are giving you tax advantage right now.
Okay, so now quickly, as we have 2 minutes left, and I just have some basic questions,
Please,
right?
please.
We talked about planners and everything else and all the different plans and everything. Now my question to you is, let's say if I want to get a wealth plan, and I do get a wealth plan, how is it going to benefit me in the long run to have the wealth planner?
Well, it's more like having a doctor, having a CPA. If you have the right wealth planner, educated wealth planner, you can have this checkup done every quarter, every 6 months, every year. You go for your physical checkup. How does it help you to have a doctor? I can go to the doctor when I'm not feeling well, but if you go to the doctor every so often, every 6 months, every 1 year, then you can avoid a lot of problems in advance. So having a wealth planner not only will give you the focus, the direction, will help you do the quick checkup every so often. You decide the frequency, so they can see that you are growing in the right direction, so can avoid any surprises later.
Okay, can the wealth planner also help me with the tax savings, and they can advise me on
Well,
the tax
as we
savings?
discussed in the first segment, there are different type of wealth planners. A lot of wealth planners, or the planners as we are referring here, investment planners, they work with CPAs like us when it comes to the taxes.
Okay.
A lot of investment planners are not as savvy when it comes to the taxes. So you want to work with your CPA when it comes to the tax efficiency.
That's why I
Ideally,
wanted to make sure, yes.
ideally, if you have a CPA who is a wealth planner, or
helps.
who works closely with a wealth planner, that's the combo you are looking for.
Okay, last question I have. Let's say if someone's life situation changes, there could be a divorce or death in the family and child situation and whatnot. Who can really guide you in that situation?
Well, other than the divorce attorney, if you have one, you must consider going to the accountant, the CPA. They can help you value all the assets, put them in the proper category. They can also help you to work with the wealth planner. In a lot of cases, the beneficiary may need to be changed by default. In many cases, the beneficiary is a spouse. If you are going through a divorce type of situation, you want to make sure the beneficiary is being changed. If something is to happen, your ex-spouse is not getting the money. So you want to work with accountant,
So the
attorney.
experts and advisors will definitely help. It's not
Absolutely.
only one person, but to have few individuals,
Absolutely.
experts and advisors in that group. All right, to help you with the wealth planning. With that note, we come to an end of this episode. Ajay, thank you so very
You're
much.
very welcome.
For giving us a lot more information on this wealth planner. I am Sanjeev Pandya. Until we meet again, same place, same time. Wishing you all happy wealth planning days ahead. So long.
Thank you.